Hello, this is Mijun from Meek Jushron University. Let's begin today's Meek Jushi news for July 30th. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. I was thinking about how to make today's broadcast intro cool again. I'm thinking of starting by showing you a photo. The child in this photo right now is my son. He's pretending to sleep with a lot of medals under his head. I've mentioned this a few times on broadcasts before. Even before coming to the United Kingdom, back when I was in Indonesia, I worked really hard at swimming. Now that I'm in middle school, I'm studying and spending a lot of time on music, so my grades have dropped a lot. At one point, I was such an elite swimmer that I even won a national competition. As you can see, I've won hundreds of medals so far, but why did I take this picture? This time, as I moved from the United Kingdom to Malaysia, I decided to throw away all the medals except for a few important ones. So I felt a bit regretful, and I thought I should at least keep a photo. So I took this picture. This is my daughter. She's posing as if she won all these medals, but actually, the one on the left at the bottom is the medal she won at a competition. Her swimming skills aren't as good as her older brother's. There's a reason why I'm showing you this photo. I told my son, let's leave this medal behind, and I explained why we should get rid of this medal. Honestly, we used to hang medals all over the house and brag about them a lot. Then when people came over to our house, they would ask, "Oh, what's this?" And from my son's perspective, he used to feel really proud, but honestly, now this medal doesn't have much meaning for him anymore. He doesn't even look at it anymore, so honestly, it just became something to show off to others. So I was able to argue that the value of this medal is no longer that important in our lives. And another important thing is, I said that the past is not that important. What matters in life is the present and the future. So I delivered the message to my very young son that it's right for us to let go of the past to some extent as we move forward. Personally, I believe there are two conditions for us humans to be happy. If we satisfy just these two, we can be happy. The first is that if today is even a little better than yesterday, in other words, if we are gradually improving, evolving, and making progress, we can be happy. And what is the second condition? It's the expectation that tomorrow will be even a little better than today. We usually call this hope or sometimes a dream. So, the satisfaction that today I am better, have improved, or have made progress compared to yesterday, that's the first thing. The second is, even if today is a bit tough, I believe that people can be happy when they have hope that tomorrow will be a little better than today. It's the same with stock investing. If we keep being conscious of others and obsessed with the past, I believe we can't succeed in stock investing. What I mean is, let me show you Nvidia's stock chart for a moment. As you can see here, Nvidia, it has skyrocketed by 1,554% in the past 5 years. It has gone up nearly 16 or 17 times. And it's been over 5 years since I first bought a stock called Nvidia. So personally, it's not just a 10-bagger, but actually a stock that has gone up about 17 times. But when I look at Nvidia's return in my portfolio, it's not even 100% or 200%. I invested in a stock that went up 17 times, so why did my return only go up 2 or 3 times? I'd like to explain this part. The reason is that I kept consistently buying more Nvidia stock. But many people find it very painful to touch this rate of return, because you want to brag to others, right? I bought Nvidia and now it's gone up 10-fold, 9-fold, 12-fold just to be able to say this. People can't bring themselves to buy more Nvidia stock. It's the same with falling stocks. People don't want to sell at a loss because they don't want the stigma of saying they sold their stocks at a negative return, so they keep holding on to stocks that keep dropping. This is a very bad habit. When investing in stocks, the thing you need to be most careful about is getting attached to the past and trying to show off to others or using tricks just to boost your returns. That's how I see it. I gave up on Nvidia's returns. Even though I was holding a stock that went up 17 times, I can't really brag about that kind of return. But what I can be proud of is that instead, I ended up owning almost 1,000 shares of Nvidia. So, as of today, I'm going to focus on whether this stock will continue to perform well from now on rather than dwelling on the past. Because I kept collecting Nvidia stock with a forward-looking mindset, I want to say that's how I've been able to hold so much of this great stock until now. Alright, that's it for today's opening, July 30. Let's get started with today's big stock news. Before I get into today's prepared content, I have a very important announcement to make first. About 4 hours ago, I posted an announcement on the Mijun YouTube channel letting you know that the Mijun YouTube broadcast will be on break for about 10 days. I shared this message with a bit of regret. As you know, I will be moving to Malaysia with my family in early August. So, inevitably, after the broadcast on August 1st, which is this Friday, the YouTube broadcast will be paused for about 10 days. I feel very regretful about this, because recently the number of new subscribers has been increasing a lot, and the views on the videos have also been rising rapidly. So, just when the Mijun channel has good momentum, I feel very regretful that I can't take advantage of this momentum and have to take a break from broadcasting for a while. But I will wrap up my life in the United Kingdom well for about 2 weeks, and I'll do my best to settle into the new environment so that I can come back healthier and stronger. And, I have a paid membership, right? So, I want to assure you that the Mijun membership will continue to operate as usual during this period. Also, I will do my best to make sure that my personal changes do not cause any inconvenience to the members and that the membership is managed properly. And during the break from my YouTube broadcasts, there will be people who still need consistent investment information and insights. For those people, I personally suggest that you consider joining the Mijun membership for just 1 month and get the investment information you need during that time. I've sent you the link where you can sign up for the Mijun monthly membership. And also, recently, I've received a lot of emails from people who missed out on the 50% annual discount event that was held last month. There are many people asking if they can still sign up even though it's late, and if they can get the 50% discount. This time, before I take a break from broadcasting, I will extend the 50% discount event for just 5 days, from July 30th to August 3rd. And this Friday, on August 1st, the live broadcast revealing my monthly portfolio returns that you all anticipate is also scheduled. I hope many of you will watch my last YouTube broadcast from the United Kingdom, which will be on August 1st. So, I want to apologize for taking a break from broadcasting due to these personal changes in my life. I hope you can understand with an open heart, thinking, Mijihun is finally taking a summer vacation he hasn't been able to take for a long time. Now, let's go over the highlights of the United States stock market from yesterday. First, if you look at the S&P 500 map, yesterday I counted alone. About half went up and half went down. If you draw a diagonal line like this, the right side went up and the left side went down. So, the tech stocks we love generally showed a bad trend. However, among tech stocks, the software sector performed relatively well, and except for Nvidia, the rest of the semiconductor stocks didn't have a bad trend. There wasn't much change in market breadth. As you can see, it's at 65.9%, so it dropped about 1% from 66% yesterday. There was almost no change in the stocks with a good long-term trend compared to yesterday, maintaining 60 to 75%. If you look at the volatility index, 15.8, it went up a little compared to yesterday, but at 15.8, the market volatility is still very calm, and the unique market trend continues. That's how you can see it. The Fear and Greed Index also dropped 1 level from 69 to 68 yesterday. Despite this, the market sentiment remains calm and nearly unchanged, as evidenced by the current conditions. It's the same with market score. It's barely moving in the greed phase and is maintaining the same state. Now, there is one change. I think I should start by reading this article to you today. There's a major change that I think is worth recommending as content, something our investors should pay attention to. What is it? It's that B2 has started. What is B2? It refers to investing with borrowed money. So recently, there has been news that more people are borrowing money to buy stocks. I think we need to listen to what this is about. An expert named Jim Reed, who is the head of macro and thematic research at Deutsche Bank, will be joining us. According to this expert, the speed at which stock investors are borrowing money to buy stocks is increasing sharply, reaching levels comparable to past market bubble periods. Margin investing, also known as credit investment. This happens when an investor borrows cash using the stocks they already own as collateral in order to buy more stocks. If you own stocks, you can use them as collateral to borrow money and buy more stocks. That's essentially what we're discussing. Now, according to Deutsche Bank, what was the level of accumulated margin debt on the New York Stock Exchange in May and June? It was the fifth largest two-month increase since 1998. So you can see that the number of people using margin has increased exponentially over the past 2 months. According to the data, the only times there was a bigger two-month increase than this were during the dot-com bubble burst in 2000 and right before the financial crisis in 2008. This is rather depressing news. Because after seeing such a big increase like this, the dot-com bubble burst or the financial crisis hit. So you can see it as a bad sign is appearing. Jim Reed says, the current surge has not yet reached the extreme levels of previous cases. So he's saying there's no need to be too nervous. Therefore, while there is still a possibility that stocks could rise further, it is still one of the most aggressive 12-month cumulative increases on record. So since the atmosphere isn't very good, you should be careful. That's how you should see it. But that's not all. There's something even more ominous. The margin debt to gross domestic product ratio is now surpassing the levels of both 2000 and 2007. So right now, the margin debt ratio is extremely high. You could say it's unhealthy. This strategist's warning came as the market, which had plunged after President Trump announced high tariffs in April, rebounded explosively. For reference, the S&P 500 hit its low on April 7th, and in less than 4 months since then, it has surged more than 30%. Now, the fact that the market index has risen more than 30% like this, isn't that unusual? And there's another negative sign. Recently, meme stocks are surging again. So the article points out that there are many voices on Wall Street warning about heightened speculative activity. Now, let me explain why the increase in margin investing is such a worrying sign. First of all, the surge in margin loans points to excessive optimism that is widespread in the market. It means the atmosphere is just too heated. Now here's why. The fact that investors are willing to take on the risk of borrowing money just to buy stocks means that those people are almost certain that stock prices will rise in the future. That's how you can interpret it. When there are many people who are this confident, the problem is this phenomenon often appears when the market is near its peak. You really need to think very contrarily and be negative. Well, that's because stock investment is a high-risk asset. But investing in risky assets means your sense of caution has dulled. That means there aren't many people who are worried. And there's another thing. Fear of missing out is appearing. Fear of missing out stands for fear of missing out. With everyone else attending the party, am I the only one not going? People don't worry about this and just invest. Now, when buying without logical reasoning becomes widespread like this, the problem is that the market becomes vulnerable and can easily collapse even from a small external shock. If the atmosphere is too positive, it means there's an expectation that everything will go well, that everything will flow perfectly. Now, when expectations are this high and something happens that doesn't meet those expectations, there's a possibility that stock prices could drop sharply. But this isn't a big problem. The real issue is the second one. Now let's hear what that is. So, in a market situation where B2 is prevalent like this, when an unexpected downturn occurs and a correction begins, a structural vicious cycle forms. That's the bigger problem. So, what this means is that originally the correction would have ended after a 3-4% or maybe 5-6% drop, but now the correction could be prolonged. Now let me tell you why. When stock prices fall, the value of stocks used as collateral by investors who borrowed money also decreases. Investing with borrowed money means buying more stocks using your current stocks as collateral. But when stock prices fall, the value of your collateral also drops. If the value of your collateral falls below the minimum maintenance ratio set by the brokerage, you'll receive a margin call from the brokerage asking you to add more collateral. The problem is that most people who invest with borrowed money don't have enough extra funds to respond to a margin call. If they had extra money, they would have already invested it. They're using margin because they don't have spare funds. What that means is, regardless of your intentions, you may be forced to sell your stocks to pay back the debt. When the volume of stocks sold out of necessity rises like this, it quickly disrupts the market's supply and demand balance. This factor further accelerates the decline in stock prices. But the problem doesn't end here, because when the stock price decline accelerates due to the selling by investors who have received a margin call, it also lowers the collateral value of other credit investors. When that happens, there's a possibility of a domino effect that triggers new margin calls. Therefore, high levels of margin loans like this can act as a structural risk that turns a small correction into an uncontrollable crash. That's why, when more people start investing with margin like this, it's correct to interpret it as an important warning sign for the market. That's how I would explain it. Now, everyone, you probably remember Mr. Warren Buffett's advice. Be fearful when others are greedy, and be greedy when others are fearful. Now, that's some great advice. It's a practical investment tip with a logical background, and I'll wrap up by saying that now is the time when we need to remember this advice. Next is the performance of Mijuan top pick. First of all three major indices closed in the red yesterday. The Dow Jones performed the worst, dropping by 0.46%. The S&P 500 fell 0.30% and the Nasdaq dropped 0.38%. Now, while all three major market indices declined like this, Mijuan top pick actually went up by an average of 0.37%. That's because one stock surged sharply. As you can see, Celestica posted a strong gain of 16.51% yesterday thanks to its earnings results, and as a result, it showed a sharp upward trend of 28.7% over the past week. AMD was the second best performing stock, up 2.18%, followed by Google at 1.65%. Credo rose 1.32%, Vistra 1.08%, Broadcom 1.06%, and Talem Energy 0.68%. Lastly, Bitcoin rose by 0.23%, reaching 118,210. The rest of the stocks all declined, but most of them fell only slightly. Taiwan Semiconductor Manufacturing Company fell 0.58%. Nvidia 0.70%, Amazon 0.76%, Persla 0.96%, Palantir 1.04%, B2 1.05%, Tesla 1.35%, Coinbase 2.12%, MicroStrategy 2.26%, and Meta 2.46%. Lastly, Trade Desk performed the worst, dropping by 4.44%. Among the stocks that fell yesterday, if you look at Coinbase's stock trend, it has dropped 8.16% over the past week, showing the worst weekly performance among the United States top picks. So as Coinbase is going through a correction, I want to talk about whether this is a buying opportunity or if it's time to reduce your stock holdings. First, if you look at the title, this article is a bit positive because Citigroup has raised Coinbase's target price by a whopping 87%. That's some very positive news. First, please read the article. After that, I'll give you some additional explanations. According to Citigroup Global Markets, Coinbase has recently been experiencing a variety of positive developments. The first is legislative momentum. This means that policies are gradually becoming more favorable toward digital assets. Therefore, there is a high possibility that Coinbase will benefit indirectly. The second is that the price of Bitcoin is not bad. The trend is good. To summarize, three positive factors are expected to boost fee-based revenue: improved market sentiment, increased trading volumes, and custody fees. CD analyst Peter Christensen appears. This expert once again reaffirmed a buy rating for the cryptocurrency service provider, that is Coinbase. He raised the target price by 87% from the previous $270 to a whopping $505. Now, with this high new target price, it can be calculated that the stock still has an additional 36% upside potential. Coinbase's stock price is benefiting from the Trump administration's favorable attitude toward cryptocurrencies and the entire financial ecosystem surrounding them. It has risen about 50% this year, but a 50% increase. Uber's stock also went up by 50%. So considering the recent atmosphere in the cryptocurrency sector, it's a bit of a stretch to say that Coinbase's stock price has skyrocketed. Kurisu Tansu sent out a 27-page client report released on Monday, and in it, he says that Coinbase has benefited from several catalysts in recent weeks. The first is the Genius Act, a brilliant bill which has been signed regarding stablecoins. The second is the Clarity Act, which has passed the House. If it passes the Senate as well, there's a high possibility that President Turiompo will sign it too. Third, Coinbase has finally been included in the S&P 500 index. Coinbase has benefited from these various catalysts, according to the speaker. And they're also saying that investors have started to put a premium on blockchain innovations that can actually be applied in real-world activities. What this means is that, in the case of Bitcoin, it's actually not applicable to real-world activities. That's because it's pretty difficult to buy goods and things with Bitcoin. At least for now, that's still the case. But now, Coinbase is starting to be seen as a beneficiary not just of Bitcoin, but also of stablecoins. And as for stablecoins, they're being talked about as a blockchain innovation that we can actually use for real payments. Christens explains the reason why he raised his target price by as much as 87% like this. First of all, the quarterly increase in cryptocurrency prices reaches as much as 40% to 45%. So since Bitcoin has gone up this much, the target price needs to be raised. That's the first reason. Secondly, Coinbase's structure and improvement in service profitability. So going forward, there has been a structural improvement that allows profitability to keep increasing. That's what they're saying. This analyst? The integration of Coinbase's stablecoin United States dollar coin and also the card partnership with American Express, as well as the announcement of new products like new payment features. They expect these will drive subscriber growth for Coinbase, predicting that more and more people will use the subscription model going forward. In June, Coinbase announced that American Express cards would be offered exclusively to members of Coinbase One, their monthly subscription service that provides zero trading fees and other benefits. So, Christens predicts that Coinbase will also add futures and options. As a leading company in the upcoming era of cryptocurrency regulation, it will continue to benefit, and its stock price will have further room to rise. The article concludes by predicting a steady increase in the stock price going forward. Now, this time I tried to summarize the article content in more detail, because there are a lot of important points mentioned. Alright, let me summarize the Genius Act for you once again. What is the Genius Act? It is based on federal and state-level supervision of stablecoins that are pegged to the dollar. What this means is that they want to make stablecoins into safe assets. It requires stablecoin issuers like Circle Internet Group to hold 100% reserves in United States dollars or United States Treasury bonds. And not only do they require it, but they also say they'll check regularly once a month and control it themselves. And another thing is, with the passage of the Genius Act, individual states in the United States can no longer announce that they will completely ban stablecoins in their state. They can no longer create or enforce laws that go against federal law. Okay, therefore, it can be understood that the United States government is now effectively able to fully control and manage stablecoins. Now there's one more thing, and that's the Clarity Act. The Clarity Act still needs to pass the Senate, but for now, it has passed the House. Let me explain why this is important. According to the Clarity Act, tokens, these cryptocurrencies, are likely to be regulated not by the Securities and Exchange Commission, but by the Commodity Futures Trading Commission, known as the Commodity Futures Trading Commission. Now, what this means is that the Securities and Exchange Commission, which we call the Securities and Exchange Commission, if a certain asset has the characteristics of an investment contract, it's classified as a security. And if it's classified as a security, very strict regulations are applied. On the other hand, the Commodity Futures Trading Commission, defines Bitcoin as a commodity like gold, oil, or wheat. Now, why is this important? If the Clarity Act passes and Bitcoin is officially defined as a commodity, the label of being an unregistered security could be completely removed. And if Bitcoin is confirmed as a commodity under the supervision of the Commodity Futures Trading Commission, it means that institutions will have a clear status to pass internal regulations and investment eligibility reviews. What that means is this. It means that the huge funds from institutions that have hesitated to enter the market until now could now have a way to flow into Bitcoin. You can understand it as having a tremendous effect like that. And there's another important key factor. It includes requirements like registration for digital asset exchanges, such as Coinbase, custody, and best execution. What this means is that digital asset exchanges will have to officially register with the government in the future. That's how you can interpret it. So what that means is that not just anyone can create an exchange and buy or sell coins anymore. So if just anyone can create an exchange and buy or sell coins like this, investing in coins will become safer. And from Coinbase's perspective, their competitors will disappear. So, we can see this as a very big positive factor. Now, lastly, I'd like to share my personal opinion about the Coinbase One subscription model that was mentioned in the article. Coinbase is planning to launch a credit card called the Coinbase One card in partnership with American Express. They already announced it in June, and this card is only issued to Coinbase One subscribers. And this card gives you a whopping 4% back in Bitcoin on all your purchases. That's an incredible cashback. Should we call this Bitcoin 100? Anyway, it gives you back a huge amount. And one more thing about Coinbase. As you all know, Coinbase is actively expanding a payment ecosystem using the stablecoin United States dollar coin, which is pegged 1-to-1 to the dollar. Coinbase One subscribers can deposit United States dollar coin at a higher interest rate than regular users. Regular users receive 4.1% interest, but subscribers get as much as 4.5%. Personally, I think 4.5% is an impressive rate of return. Now, Coinbase is also actively introducing United States dollar coin payments by partnering with major online shopping malls like Shopify. What does that mean? Now, Coinbase users can make payments quickly and easily from anywhere in the world with low fees, even without a bank account. That's how you can see it. So, as this payment feature expands, what about the appeal of Coinbase One, which offers higher interest benefits? It can only get bigger and bigger, so that's what we can expect. Now, the reason is that there are many people who deposit their money in banks or people who have savings accounts. In the future, payments can be made with very low fees, and if you deposit your funds in Coinbase, you can get 4 to 5% interest. Therefore, it can be interpreted positively that more and more people are likely to move their deposits to Coinbase. Now, let's take a look at Coinbase's momentum. Recently, its momentum has weakened significantly during a technical correction. 8 indicators signal sell, 8 signal buy, and 10 are neutral, indicating a neutral stance overall. The good news is that the relative strength index is still staying above 50. So, compared to the market momentum, it's somewhat positive. That's how you can interpret it. Now, let me show you Coinbase's one-year stock chart. It hit a peak in July. The market is currently in a short-term correction phase as profits are being realized. Let's now discuss the negative aspects. The 21-day moving average has been broken. If it had rebounded at the 21-day moving average, it would have been a bit more positive. But for now, the 21-day moving average has been broken downward. This can be interpreted negatively. If it drops slightly more, you can see 350, which is the previous high point. Therefore, if it finds support and rises at 350, which is a strong support level, the upward trend is still valid. That's how it can be interpreted. The mid to long-term outlook shows the upward trend from April's low is still valid, provided 350 is not broken. The short-term upward trend also remains intact. This is the correct interpretation. Now recently, there have been many positive views on Coinbase's business outlook, such as clearer regulations and the influx of institutional investors. Therefore, I personally believe that once the short-term correction is over, there is a high possibility that the upward trend will continue. However, if 350 is broken, it means there's a possibility it could drop to the second support level, which is 280. That's a prediction we can make. So, at this point, the most important thing is whether 350 holds or not. Secondly, if it manages to rebound near 350, it would be good to see whether it can break above $384 again, which is the 21-day moving average. Now, if it manages to rebound near 350 and the stock price goes above the 20-day moving average again, what does that mean? It could be interpreted as the short-term upward trend being restored again. Lastly, for today, the final content we've prepared is the Mise en podcast. The main topic of today's podcast is Palantir. Palantir is scheduled to announce its earnings results next Monday, which is August 4th. But recently, Palantir's stock price has kept rising. And actually, among Mizuwon's top picks in 2025, Palantir has had the best stock price increase. So, from our shareholders' perspective, with such an important earnings result coming up, I'm really wondering if I should take some profits now. I'd like to talk about this a bit. I actually have a similar opinion to the author who wrote this post. So I hope you listen to this and come up with your own strategy. I want to thank everyone who stayed with us until the end of today's broadcast. Tomorrow is the last day of July, and the day after tomorrow is the first day of August. There are only 2 broadcasts left in the United Kingdom, and I will do my best to prepare for these last 2 shows as well. Let's continue investing in United States stocks together until we can all retire. Have a happy day, thank you.
Hello, Mijuon family. I came quickly because there's another interesting analysis article.
Hello, I came along too. I hope you find daily reading analysis articles enjoyable and interesting.
Today, we'll be taking an in-depth look at Palantir, PLTR. This is an analysis article from Okoff Investment that came out ahead of the upcoming quarterly earnings announcement. According to this analysis, Palantir's business itself is growing very strongly, but the stock price level, in other words, the valuation, is so high that even a small mistake would be hard to tolerate. That's the diagnosis they're making. So today, my goal is to clearly point out Palantir's current situation and the key points we need to pay close attention to. All right, then shall we get right into the main topic? Palantir's earnings announcement is coming up soon, right?
They're set to announce Q2 earnings after market close on August 4th. The market currently expects revenue of $939 million and earnings per share of around $0.14. Compared to last year, these numbers are up 39% and 54% respectively.
Wow, just looking at the growth rate, it's really incredible. Even in the article, they say there's no problem with the business itself. The first quarter results were also very good, and analysts keep raising their expectations, right?
That's right. Especially the second quarter earnings per share consensus has risen by as much as 4.75% in just the past 3 months. The expected sales of $939.24 million slightly exceed the company's own guidance. But well, the analyst thinks that since Palantir exceeded market expectations by more than 2.5% last quarter, it's quite possible for them to achieve their target this time as well.
So you think there's a high possibility of achieving the earnings per share target of $0.14 as well?
Yes, compared to the previous quarter, the expected revenue growth rate is 6.26%, but the expected earnings per share growth rate is even higher at 7.7%. This means that the profit margin is improving. Looking at Palantir's current business expansion, the continuously increasing number of customers, and the contribution of highly profitable artificial intelligence platform and artificial intelligence platform sales, I analyze that it is fully achievable. But
with such a positive outlook, why does this analyst maintain a hold investment opinion? Just like the title says, saying there's no room for error means there's a lot of risk involved. Does something feel a bit uneasy? Yes?
That's the most crucial reason. It's because of the extremely high valuation. Currently, the stock price is trading at 96 times the expected 2025 revenue and over 200 times the expected net profit. Especially when you look at the forward price to earnings ratio or forward PE based on future earnings, it's about 271 times.
271 times. Wow, that's incredibly high. Yes?
This means that the current stock price is 271 times the net profit expected to be earned in a year, so it shows just how high the market's expectations are. Even based on 2026, it's over 213 times.
Usually, such high numbers appear when explosive growth is expected in the future. From a growth stock perspective, how should we look at this? That's right.
Analysts state that for profitable companies like Palantir, future earnings growth rate or earnings momentum is crucial when investing in growth stocks rather than just potential. However, forecasts indicate Palantir's earnings growth rate is predicted to slow substantially in the coming years. For example, the estimated earnings per share growth rate for 2025 is 41.9%, but by 2031, it's expected to drop to 28.89%.
So the growth rate is slowing down. Then, besides the high valuation, are there any other specific risk factors?
Yes, there are. Recently, the United States Department of Defense, there was news that they are testing various artificial intelligence models to reduce their dependence on certain companies. This is a risk factor. Palantir's technology is sticky, making it hard to switch once adopted. So I think there's a high possibility that they'll maintain their status as a major supplier. There's the growth rate of new contract sizes in the future, and this could turn out to be lower than expected. The market might be factoring this risk into its analysis already.
I see. So in the end, no matter how good the earnings are, it doesn't necessarily mean the stock price will go up. That's what you're saying.
That's correct. The current stock price is excessively reflecting expectations for future growth. The price-to-earnings to growth ratio, which compares stock price to earnings growth rate, is unusually high at 7 to 9 times based on 2026 estimates, according to analysts. So if the company fails to provide upward guidance that exceeds market expectations, or if there are no unexpected positive surprises, even with strong business performance, stock prices may still drop significantly. I even made some conservative assumptions in my calculations, and still, the target stock price 3 years from now could be more than 31% lower than it is now. That's the kind of calculation I presented.
To sum up, Palantir is likely to have good earnings this quarter as well. However, since too many expectations are already reflected in the stock price, even a small disappointment could lead to a significant correction. The analyst gave a hold opinion for that reason? Yes.
That's right. The analyst also says that Palantir has technical advantages, growth potential, and the possibility of future profit improvement, so it's hard to see this as just a simple rejection. However, the current high price multiple is clearly a significant burden. And after the earnings announcement, even if there is good news, there is a high possibility that so-called sell-the-fact movements will appear, with profit-taking selling.
So the stock price has already risen in anticipation of the good news, so after the actual announcement, people sell, right? Yes.
That scenario is also possible.
Today, we took an in-depth look at Palantir's quarterly earnings outlook and the potential hidden risks within. As always, it's important to make your final decision after careful consideration on your own. Lastly, let me ask you this question. In your opinion, how much future success do you think is already priced into Palantir's current stock price?
Thanks for being with me today. Have a great day.